You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome back to the Deep Dive. Today, we're doing a pretty comprehensive sprint through global markets and news.
Yeah, we're synthesizing everything, really. FX, commodities, trade, geopolitics.
Trying to give you that shortcut to what really matters this morning.
And it's all connected, isn't it? The risks, the opportunities. Our goal isn't just, listing prices.
Right. It's about putting the FX and commodity moves together with the bigger picture stuff. Trade shifts, geopolitics.
You need that full view to really understand where things might be heading.
Absolutely. And looking at the source material today, there are two big narratives jumping out.
Definitely. You've got this real sense of progress on a Gaza ceasefire that feels immediate, lowers risk a bit.
But then contrasting that, you have this longer-term strategic tightening, global trade controls, China's rare earth announcement.
Exactly. That tension is, I think, the perfect place to start. Immediate relief versus that structural risk building up.
Okay, let's kick off with currencies. FX.
Right. And the place to start is always the U.S. dollar. It's kind of the anchor.
So how's it looking in the European session?
It's got a firm tone, holding on to those gains from yesterday.
So still the safe haven. When things are uncertain, people pile into the dollar.
Pretty much. Whether it's geopolitics or policy worries, the dollar seems to be where capital parks.
Okay, but the moves against it aren't all the same, are they? What about the yen?
Ah, the yen. Well, it's steady today, but that's after quite a sharp slide earlier in the week.
People are still processing that softer wage data from Japan, I guess.
Yeah, that's part of it. It feeds into the Bank of Japan thinking. But maybe more importantly, everyone's watching the Ministry of Finance.
Looking for signs they're uncomfortable with how fast the yen's been moving.
Exactly. Any hint of verbal intervention, traders get hesitant. They don't want to push dollar-yen too much higher if officials might step in.
Interesting. Okay, now, the euro, seeing a bit of life.
A modest rebound, yeah. Pulling back from that 1.16 level.
And the trigger for that?
Purely political, it seems. France signaling they're getting closer to naming a new prime minister, maybe getting a budget sorted by year-end.
So less political drama equals a bit of euro breathing room.
For the moment, yes.
Yeah.
The market sees it as like a temporary cap on the uncertainty.
But the underlying stuff, the debt, the growth challenges, that hasn't changed, right? So how high can the euro really bounce? Is this just shorts covering?
It feels like short-term relief, definitely. That political uncertainty is still lingering in the background.
So a new PM helps organize things, but doesn't fix the bigger fiscal issues.
Precisely. Which probably means the rebound is capped.
Yeah.
The euro might still be more vulnerable to bad news than, say, the dollar.
Gotcha. Now let's hop over to the Antipodeans, NZD, AUD. Big news out of New Zealand yesterday.
Oh, yeah. The RBNZ. That was the shocker.
Yeah.
The Kiwi, the NZD, is trying to claw back some ground today, but the losses yesterday were pretty big.
Why so significant?
Well, the Reserve Bank of New Zealand delivered a 50 basis point cut. Bigger than expected.
Okay, that's dovish.
And crucially, they explicitly said more easing is possible. It's a very clear signal. It just hammered the NZD's appeal for carry trades. Money flowed out fast.
Wow. And how's the Aussie dollar doing in comparison?
The AUD, holding up much better, actually. Seems buoyed by a slightly better mood in the region, maybe some stability in commodities, which we'll get to.
So interesting divergence there between the Kiwi and the Aussie, despite being neighbors.
Definitely shows how central bank policy is driving things right now.
And quickly on the U.S. side, the FOMC minutes. Anything major there?
Then generally seen as cautious on the interest rate path ahead. Nothing too dramatic.
So it's less about a strong signal on future Fed moves driving FX right now.
Right. It shifts the focus back to just, assessing how those subtle policy expectations might tweak volatility, rather than giving the dollar a strong new direction based on Fed signals. Its firmness is more about current stability than future hikes.
Okay, that policy discussion leads us nicely into commodities and the geopolitical forces shaping prices. Gold first.
Yeah, gold. It's easing back a little from those record highs. Just a bit.
Finding support, though.
Seems to be right around that key $4,000 level. It feels like a psychological floor.
What's the balance there? What's keeping it supported?
Well, you've got the renewed optimism about the Gaza ceasefire that usually dampens safe haven demand a bit,
What?
but you're weighing that against these bigger structural risks. Huge government debt levels globally, trade tensions, those things aren't going away.
So those broader risks provide that floor for gold, preventing a big drop.
Exactly. A very firm anchor point around $4,000 for now.
And those Gaza headlines are hitting oil directly.
Oh yeah, oil's a little softer, fractionally, directly linked to reports of progress on that first phase ceasefire.
Because that reduces the immediate risk of supply disruptions in the Middle East.
Precisely. The market dials back that near-term risk premium.
But it's not dropping sharply. Why is the move contained?
Good question. China. Traders are also factoring in China's return from the National Day holiday.
The prospect of demand picking up again.
Right. Gradual normalization in onshore demand is expected. People anticipate more liquidity, more activity, which kind of pushes back against the ceasefire relief.
And that China reopening story is probably even clearer in industrial metals.
Definitely. They're looking firmer. Copper, especially, Dr. Copper, the economic barometer.
Yeah.
It's benefiting from better liquidity to just normal trading, picking up as Chinese markets come back online after the break.
Makes sense. And one last check-in. European energy. Anything notable?
Just a useful reminder, really.
Mm-hmm.
Britain's system operators came out expressing confidence about gas and power supplies for the winter.
So less worry about shortages there.
It helps keep a lid on excessive price spikes in European gas. Adds a bit of predictability in a pretty turbulent commodity world.
Okay, shifting gears now to those strategic policy decisions,
Yeah.
the ones shaping supply chains long term. Sounds like some friction brewing between the U.S. and EU.
Yes, transatlantic tensions are back. Brussels is voicing concern. They're worried new U.S. demands might sort of gut a trade understanding they thought they were close to.
What kind of demands? Are we talking tariffs again?
It seems to be going beyond that. The worry is Washington's pushing for things like sourcing rules or tech standards that heavily favor U.S. companies.
Undercutting the idea of deeper integration they were aiming for?
That seems to be the EU's fear. Washington naturally is framing its proposal as reciprocal and balanced.
But the fact that Brussels is pushing back suggests it's a real point of contention.
Absolutely, a potential challenge to that transatlantic cooperation narrative.
Okay, but the really big one, the detail you listening need to focus on, comes from China, right? Rare earth.
This is huge. Beijing announced new export controls on rare earth materials.
Why are rare earths so critical? Remind us.
They're indispensable. Core components for magnets in EVs, wind turbines, advanced defense systems, missile guidance, you name it. The future of advanced manufacturing depends on them.
And what do these controls actually do? Is it a ban?
Not an outright ban, no. But it significantly tightens Beijing's control. They're adding licensing requirements for a whole range of dual-use items.
Dual use meaning?
Right.
Commercial and military applications.
Exactly, starting December 1st. Plus, stricter rules if the shipments might be tied to military end users anywhere in the world.
So by requiring licenses, they can create delays, add friction, gain leverage.
Precisely. It puts global manufacturers who rely on these Chinese supplies in a potentially tricky spot. Strategic disadvantage, you could say.
Interesting. Contrast that with North America, though, seemed like smoother sailing between Canada and the U.S.
Yeah, Ottawa described recent talks with Washington on steel and autos as a meeting of minds.
Suggesting there's still room for bilateral deals, region-specific agreements, even within the bigger USMCA trade framework.
Right. It shows different dynamics at play.
Yeah.
Strategic alignment in some areas, friction in others.
So stepping back, what does this mix of policy tightening tariffs here, critical minerals there, tech standards mean for markets overall?
It's guaranteed to ripple through supply chains. These aren't just one-off headlines. They become ongoing incremental drivers for currencies.
Especially those tied to metals, energy, advanced manufacturing trade, like the Aussie dollar, maybe the euro with the U.S. friction.
Exactly. Currencies become exposed not just to economic data, but increasingly to this kind of policy risk. It adds another layer of complexity.
All right, let's pivot back to the biggest immediate geopolitical story, that Gaza ceasefire. Sounds like real progress.
It does. Mediators are reporting agreement on the terms for a first phase. This is significant.
What are the details? What's actually in phase one?
So we're hearing about a structured hostage prisoner exchange, Also, an initial withdrawal of Israeli troops to a specific designated line.
And timing. When could this start?
Implementation steps are expected very soon, possibly midday local time today. Israel's government is set to meet to approve the deal.
Okay, a huge step. But potential hurdles remain. Hamas's position.
Yes, Hamas has stated they want the agreement to lead to a permanent end to the war. That's a potential sticking point for later phases.
So while markets react positively to the immediate risk reduction, the whole thing is still quite fragile. Needs careful watching.
Absolutely. The key variable right now.
Okay, moving away from the Middle East conflict for a moment. Strategic defense warnings coming out of Taiwan.
Yes. Taiwan's defense ministry flagged that China is intensifying what they call hybrid warfare tactics.
Hybrid warfare, let's unpack that.
Yeah.
What does it actually involve in the Taiwan context?
It's sophisticated stuff designed to undermine and pressure without triggering an actual shooting war. The sources mention a mix of things.
Yes.
Cyber operations, targeting critical infrastructure, using AI for better reconnaissance and targeting information, and constant gray zone pressure.
Gray zone, what falls under that?
Things like frequent air and sea incursions near Taiwan, pushing the boundaries of their defense zone. Also, disinformation campaigns aimed at eroding public trust and testing Taiwan's responses.
The goal being to exhaust and confuse them.
That seems to be the idea. Keep them constantly off balance without crossing the threshold into open conflict.
Got it. And finally, a signal from Russia regarding nuclear agreements.
Yeah, a bit of a tougher line emerging. Moscow questioned the viability of its obligations under an old agreement with the U.S. about disposing of weapons-grade plutonium.
This dates back to post-Cold War disarmament efforts.
Right. Both sides agreed to get rid of excess plutonium. Russia, questioning its side of the deal, now keeps those strategic stability headlines bubbling.
It signals worsening trust, using old pacts as leverage.
It seems that way. It definitely makes the whole dialogue around arms control more difficult and tense. #outro. So that kind of covers the landscape for you this morning.
Yeah, quite a mix. We've got the dollar holding steady despite that RBNZ shock shaking things up down under.
Gold finding that floor near record highs, balance between ceasefire hopes and those bigger structural risks.
Oil reacting to the Middle East news, but capped by the China reopening story.
And then the really crucial long-term stuff. Trade policy tightening, especially those rare earth controls.
Yeah.
And the friction in the US-EU relationship.
So looking ahead, what should you be watching most closely right now?
Number one has to be, does this Gaza ceasefire actually hold? Watch the implementation details closely.
Okay, what else?
How does China's return actually translate into commodity demand? We need to see the numbers, the actual buying over the next few days.
And keep tracking those US-EU trade talks, any concrete shifts there.
Definitely. Any real change in parameters there could impact multinational companies significantly.
It's all about anticipating what's next, not just reacting, right?
That's the game, applying the knowledge.
Exactly. So let's leave you with this final thought to mull over. Beijing's new export controls on rare earths start December 1st.
A concrete date.
Given how vital these materials are for everything from EVs to defense tech, what specific cascading impacts might that implementation have on global advanced manufacturing over, say, the next 12 to 18 months?
That's the strategic question to dig into next.
Something to think about. Thanks for joining us for this deep dive.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.